Hello everybody and welcome back to the channel. This is episode 31 of my investing journey, where I document my weekly contributions, ETF purchases, distributions, and portfolio performance. And you know what? After a couple of tough weeks, if you've been following my adventures, this week was a very different story. Yeah, almost the entire portfolio finished green. But anyways, more of that as we go through with the presentation. As always, this is none of this is financial advice. Okay, I'm just simply documenting my own portfolio. I'm just sharing what I'm learning along the way. You know, the hits, the mistakes, and so forth. Okay. As you can see by my what's showing behind me right now, portfolio is up back above 10%. It's 11.37% year to date. It was a great week. It was a very strange week. But yeah, no, very good week overall. I still think that there is going to be a pullback. At some point, something's going to have to give. Right now, I think the S&P is again at all-time highs, and so is the Nasdaq, and so is the TSX, and so are many other markets around the world. You know, I know that, for example, the Spanish market also hit the highest they've ever had ever. So I'm still of the opinion that there will be a pullback. Could be August, could be September. I don't know when, but there's definitely going to be a pullback. Not that it matters or it changes my strategy, because I'm either going to be averaging up like I'm doing right now, or I'm going to be averaging down, right? So for me, it's still an 8.5-year journey, but just to just take precautions, right? All right, so yeah, let's get on with this. So this week I added my usual $75 contribution, and then I found $50. And I thought, sure, why not? So I added those two. So this week we had a total of $125. As always, consistently building momentum week by week, small steps, which hopefully will have a big impact, and a little bit of discipline today, right, for freedom tomorrow. I'm investing in myself so I can grow my future. That's the way I see this. In terms of buys and sells, you will see that I've done something different this week. So I bought one share of CCHI, right, which is the Harvest new fund that they just launched a couple of weeks ago, which we talked about last week. But I also bought two other funds from Vanguard. I bought VA.to and I bought VE.to. Now you're probably wondering, Angelo, if you're doing an income portfolio, why are you buying like your normal ETFs, like, that have been there for like millions of years and that are not, pay only quarterly and are not necessarily like, like your typical leverage call, put type of ETF, right? The reason is very simple. I've always been a very believer of diversification, and you may have heard me talking about that in previous videos, right? There is no a Canadian provider, not even Global X, which I had to work with them at Blossom.com, that gives me exposure to European and Asian markets for developed markets, right? Not your emerging markets, but developed markets. In Canada today, the only one is Vanguard, which has VA, which is their Asia Pacific ETF, and then there is VE, which is their European ETF, right? These two are different from many of my existing holdings because they now give me a more traditional international equity exposure, which is outside of North America, right? I was very concentrated in North America, both Canada and the US. True, some of my ETF like PayG and HHII gives me exposure to some companies, But I wanted to have a bigger exposure to those two markets, right? So like I mentioned before, BA gives me exposure to Asia Pacific developed markets, and VE gives me exposure now to developed European markets, okay? It's part of my quest to try to improve the geographic diversification of my portfolio. A lot of the portfolios that I see being, shown to people, if you take a look at, for example, Perry or Leon's or Paul's, even some of the portfolios that I see from other people, like for example Adriano, they are very heavily exposed to Canada and the United States, and I don't know whether that's by design or whether this type of ETF from Vanguard is not necessarily what they're looking for in their strategy, right? But I'm hoping that these two positions will help me broaden that exposure. You can see that I didn't invest on BFB and VCN exactly because those are US and Canada. Okay. In terms of portfolio performance, yeah, there you go. Good news, man. It was, last week we were at 7.11% year to date, and this week we are at 11.37% year to date. It doesn't really matter at the end of the day. I mean, it's always good to see green, don't get me wrong. But this is, I think, 4.26 basis points in 1 week. So it was a really, really, a monster week. And what makes this week particularly interesting is that the gains was just not driven by one sector in my portfolio, one of the sleeves. Technology performed well, commodities performed well, uranium went to the moon and came back and went again, and many more of the other diversified income ETFs that I hold in my portfolio. I participated in this upstream journey, like I like to call it. So yeah. So as I mentioned, out of my 22 holdings, only one finished red, which was PayE, which was my utilities and infrastructure ETF. Obviously, biggest winner was CCHI, which went on its own, went up 13.6%, which is huge. The standout by a huge margin is definitely this ETF, right? This ETF gives me exposure to one Canadian company, Cameco. So when uranium and Cameco both move sharply, obviously this position is going to go crazy, right? It has been one of the most volatile parts of my portfolio recently, right? If you remember, uranium has been dropping for the past 2 weeks, past 3 weeks, maybe past 2 weeks. So it absolutely went crazy this week. Broadcom was also pretty good. AVGY was up 9.5% this week. The Broadcom semiconductor space had a very strong week in general. And obviously that translated directly into a AVGY, right? And then finally CMCL gained 9% this week, which was nice to see because, again, if you remember, for the last 2-3 weeks, it was on a downward trend, right? So that was pretty good. HHIS also climbed, obviously, because this income portfolio carries substantial technology exposure. So it benefited from the broader growth and the Nasdaq rally, right? Same thing with QDay, same thing with HYLD, same thing with HHIC, QQCL, and many others, right? The only red holding, as you can see here, it's obviously PayE. While almost everything else participated in the risk or move, utilities didn't participate, right? Not to the same degree. And, this is a very new position for me. So obviously, I'm not going to read too much of what happened on a single week, but it's normal that if one part of the portfolio rises, another part of the portfolio is going to go down, right? Okay. So top performance, as I mentioned before, CCHI, AVGY, CMCL, HHIS, QDay, HYLD, HHIC, and QQCL. So that was pretty good. In terms of what I mentioned before, obviously commodities went to the moon, right? Each one of those two, CCHI and CMCL, made a major contribution to the portfolio rebound. Okay, so yeah, no, pretty happy with this. In terms of the portfolio takeaway for this week, well, obviously the biggest thing is that 21 green, 1 red, right? We're going to keep it at that. On the overall year-to-date return moved from 7% to 11%, right? Which is, it's a huge weekly swing when you think about it. But just the same way that I don't like to, overreact or get overly happy when the portfolio does sharply, we're also not going to get carried away now that everything is kind of like in the green, okay? My strategy remains absolutely the same. Nothing has changed. I'm going to keep contributing by $75 a week, and whatever else I can scrunch, I can put it on a week-to-week basis. I'm going to keep collecting the income, and I'm going to keep reinvesting that income. We had income this week. I didn't put it on this presentation because the main part of the income is going to come next week, and then next week we'll do a recap of how much we got for the first half of the month. And I'm going to just let time do the compounding and do the heavy lifting. Time and compounding. Let's do the heavy lifting, right? So to have a recap of this portfolio, contributed $125, made no sales, bought 1 share of HHII, 1 share of VA, and 1 share of VE. 21 out of 22 holdings finished on the green. And pretty much that's it for episode 31. If you like what you see, please do not hesitate. Give us a like, give us a follow. We're trying to reach 100 subscribers before the end of the year. I think we're very close. We got 5 months to go, and we are 70 last time I checked. I'll be honest with you, I don't check this on a daily basis, but I think it was 70. And I will see you all next week for episode 32. Thanks for following the journey. See you in the next update. Take care now. Bye-bye.